Welcome back to the deep dive. Great to have you with us. Today, we're jumping into something really interesting. It's a topic that's, well, quietly shaking up one of the oldest assets around real estate. We're going to unpack securitizing property at scale. Sounds technical, maybe, but
Oh, yeah.
basically, it's about turning actual buildings, land, into digital tokens you can trade, like stocks almost.
Exactly. And it's a pretty big shift. Think about it. Real estate is usually what we call illiquid. It's not like stocks you can buy or sell in seconds. Selling a building takes time.
Yeah.
It's cumbersome.
Right. So this is about making it easier, more fluid.
Precisely. It unlocks the value tied up in these assets, makes it flow. And, this isn't just for the big institutional players anymore. It's actually starting to democratize things, open it up for more people.
Okay, democratizing, how so? That sounds like it could impact, well, potentially, many of us listening. Our sources, and we've looked into insights from people like Dr. Pooyan Ghamari at Alan Platform, suggest this is really driven by digital innovation. And also, broader economic trends are pushing this forward. So our mission today, cut through the jargon, get to the heart of why this is becoming so important right now.
Yeah, it really is a potential game changer. As I said, real estate's traditionally illiquid, hard to buy quickly, hard to sell quickly, especially without, affecting the price significantly or just waiting ages for the right buyer.
Okay, so securitizing takes, say, a huge office tower
Mm-hmm.
and breaks it down into smaller, tradable chunks.
Exactly. Bite-sized pieces. And the at-scale part, that's where the tech really comes in. We're talking blockchain, digital ledgers.
Ah, the buzzwords. But are they just buzzwords here?
No, not at all. They're actually the engine making this possible on a large scale.
Hmm.
Blockchain gives you that secure, unchangeable record of who owns what. And smart contracts, they automate things. Think managing potentially thousands of fractional owners across many different properties.
Right, doing that manually would be a nightmare.
Completely impractical.
Yeah.
So instead of needing millions to buy a whole building, you could potentially buy a token representing a small fraction. That opens the door for, well, much smaller investors to get a slice of the real estate pie.
That is a huge leap in accessibility. Wow. And Dr. Ghamari also pointed out it's not just about owning a piece. It's about the transactions themselves.
Mm.
Smart contracts can handle things automatically, like paying out rental income
Or enforcing certain investor rights, yeah. It reduces what we call counterparty risk.
which is the risk the other person doesn't hold up their end of the deal.
Exactly. And it cuts down on so much of the manual processing, the legal back and forth, that bogs down traditional real estate deals.
Okay, so it's faster, cheaper, more accessible. What's driving the demand for this, economically speaking?
Well, there are some powerful drivers. You've got global capital looking for places to go, especially into alternative assets. Think about low interest rates, maybe worries about inflation. Investors want stable income, ways to preserve capital. Real estate offers that.
And tokenization makes it easier to access those benefits.
Much easier. Plus, you get things like potential for real-time pricing, much faster settlement. Closing on a house takes weeks, right? Maybe months.
Oh, yeah, painfully long sometimes.
With tokenization, because ownership is digital on a ledger, the actual transfer can happen incredibly fast. Minutes, potentially, like a wire transfer. Think
Yeah.
of the efficiency gain there. Cuts out tons of paperwork, delays.
So it's really technology responding to a fundamental market need.
That makes sense. What's also interesting from our sources is how this financial tech is linking up with social responsibility, ESG goals. Yes, absolutely. That's becoming increasingly important. ESG, environmental, social governance criteria. Firms are realizing they can build these standards right into their securitized property offerings.
So it's not just about the financial return.
It's about impact, too. Investors, especially younger generations, care about where their money goes. Integrating ESG can attract that capital, build trust, enhance the brand's reputation. It's smart business, frankly.
And are we seeing this happen in practice?
Definitely. Take green certified buildings, for example. Properties built or retrofitted to be environmentally friendly. When these are tokenized, sources suggest they're actually commanding premium valuations. Investors want them.
So there's a tangible financial benefit to being green and transparent about it through this tech.
Precisely. It's this interesting convergence financial innovation meeting environmental stewardship. You get returns from the property, sure, but also potentially from better investor engagement, stronger brand loyalty. It reminds me a bit of how some platforms link crypto to physical gold, blending digital and tangible assets.
Okay, so for a company thinking about doing this, about securitizing their properties at scale, what are the key steps? The practical advice.
Good question. First off, regulation. You absolutely have to understand the regulatory landscape, and not just generally. Identify the specific hurdles like how do tokens get treated across borders? What are the rules for issuance, for trading? Leading firms often pilot projects in specific regions first to navigate this.
Right. Compliance is key to actually achieving scale. What else?
Second, technology partners. You probably don't want to build this all yourself. Look for platforms like illiquid that was mentioned that offer turnkey solutions for digitizing the assets, managing them, and crucially,
What's crucial?
having a plan for secondary market liquidity. Issuing tokens is one thing. People need to be able to trade them easily afterward. That's vital.
Makes sense. Issuance is only the start.
Exactly. Third, really embedding those ESG criteria we talked about. Design offerings that genuinely appeal to values-driven investors. And finally, monitor everything. Track the metrics, token trading volume, how long investors hold, the liquidity. You need data to show it's working and refine the model.
So to kind of wrap things up here, what we've explored today shows that securitizing property at scale isn't just some niche financial engineering. It feels more like a meeting point finance technology like blockchain and tokenization, and even social responsibility with ESG and green buildings.
It really is. It's a fundamental shift. Driven by that digital innovation, yes, but also by this demand for more transparency, more efficiency. It changes how we value these assets, how we trade them, moving from slow, often opaque deals to something much faster, clearer, and more globally accessible.
So a final thought maybe for you, listening at home or on your commute. Think about that blend of financial innovation and environmental stewardship. Those green properties getting better valuations. How might that change how we think about value itself? Maybe it's not just about the dollars and cents anymore.
Hmm. That's a great point to ponder. And building on that, if we can do this for massive illiquid things like real estate, what else is out there? What other traditionally hard to trade assets might be next? Rare art, intellectual property, what new possibilities or maybe even challenges could that unlock? Something to chew on until our next deep dive.